Just wait for nods from Wendy. We'll kick off.
Okay. Tony, your mic's not off.
Oh, yeah, better knock it off, yeah.
Okay, thank you. So good afternoon and welcome to the Governance and Audit Committee meeting on the 22nd of February. We'll get right on to the agenda by starting by noting apologies for absence. I've not been notified of any. Can I just check with Wendy? Have we any absences? Apologies, please?
No apologies.
Okay, thank you. We'll move on. Declarations of interest. I've not been notified of any declarations of interest in advance. Have you, Wendy? Nope. Okay, good. Move on to item 3. Item 3 is the public open forum. And just to remind people, this is an opportunity for members of the public to make representations to this committee, address this committee, raise questions or queries. I've not been advised in advance of this meeting that any member of the public wishes to take the opportunity to make representations. May I just yet again just confirm with Wendy that is the case?
I haven't received any notifications, Chair.
Thank you. In which case we move on to item 4. Item 4 is the action list from a previous meeting. It's fortunately quite a short action list. We'll take each one in turn just to and try to understand where we are with these actions. The first one is in relation to a paper on finance team capacity. Could I just ask John Davis, Head of Finance, to briefly update us in terms of where we are with this paper, please?
Thank you, Chair. Afternoon, everyone. So, yeah, obviously this has been on the action list for quite a while. We are coming to conclusion on this. The paper has been drafted. We're just waiting for some final HR advice before looking to rubber stamp that. I've offered the Chair early sight of that paper, so that'll be coming forward shortly, and we hope to make some good progress now over the next few weeks in terms of getting that over the line and starting the necessary recruitment process around those gaps in resourcing that we've had for quite a while. So I guess from that perspective, Chair, a question really as to whether this remains on the action list going forward, whether you're happy for that to come off, given that we're coming to conclusion. But I think either way I'm happy with the direction of travel on that.
So thank you, John. I think I'd like to keep it on the action list for the time being. You used the term, we'll see a report shortly. Hopefully that's in the March meeting. I would be somewhat disappointed if it went beyond March, because I think we'd like to see it in whatever state it is at the next meeting, please. Okay, the next item is with respect of the people strategy. That's not due till May 24, so I wasn't going to ask for an update on that paper. Item 3 is the whole authority complaints report. That is on the agenda for this meeting. Whilst I don't think this action's been specifically addressed in the report, I'm comfortable with the complaints report itself. So I suggest we close it, but on the proviso that if members are dissatisfied with the report, we come back to this action afterwards. Item 4 is in respect of which control policies this committee should be concerned with. That action is not due until April, so yet again, let's keep that open. I'm not asking officers for an update at this time. Item 5 is a query in respect of the statement of accounts for the charitable trust funds. I recall that John Davis sent out an email reply some time ago. May I just check, I think with Sarah Birch, that she's content with that reply?
Yes, thank you.
Okay, in which case we can then close that action. Thank you. In which case we'll move on to item 5. Item 5 is the statement of accounts for the council. What I'd like to do, as I have done in previous years, is take items 5 and 6 together. In a few moments' time, I'll ask John Davies, our Head of Finance, to talk us through the highlights of the Statement of Accounts, drawing out key points, noting, of course, that members have read both the cover paper and the accounts themselves. I'll then turn to Rachel Freitag from Audit Wales to talk us through what is known as technically as the ISA 260. Highlighting the approach taken, noting that the audit has been undertaken in light of the ISA 315, which implies a more intensive and focused audit approach. Note the issues identified and then the recommendations from management to take forward. I'll then open the floor for questions and comments, and then we look then as appropriate to approve those accounts. So let's start with John, please. John, over to you to talk us through the accounts, please.
Thank you, Chair. It feels a long time coming, I'm sure, for the committee for this report, as it does for us as a finance cohort. But it's pleasing that we've got this over the line now. Members will recall the draft coming forward in September to the meeting of Governance and Audit Committee. That was the point that members were able to scrutinise and give comment on the accounts. This brings forwards more the results of the audit process and the findings that are within it. So it has been a protracted period of audit. We handed over the accounts back in July 2023. So there have been resourcing issues on both sides, within the finance teams, but also with Audit Wales. I'm sure Rachel will come on to that a little bit shortly. But it is pleasing to put a line under this, and it is a pleasing audit report from our perspective. It is another unqualified opinion within it, albeit with some expected misclassifications and recommendations within it. I think in terms of the changes that we've made since the draft, they are primarily misclassifications, so moving things around either within the primary statements or within the notes themselves to the accounts. Those are to be expected. We're a large organisation. Many transactions during the year, and it's inevitable that there will be a few issues with that, and that can be expected. In terms of the recommendations within the report, I think, disappointing, I guess, from one point of view that we've got a couple of items relating to fixed assets again. It's an area that we've made good progress on in previous years. I think the revised audit approach has perhaps looked at this in a slightly different way. I think what I would say is that these aren't inherent weaknesses in our processes. This is more about our interpretation of regulations and guidelines as opposed to what others may interpret them as. So these are not issues that are impacting the user of the accounts to a material level, and we're happy that we'll take that learning that has been presented there within the recommendations on board. Recommendation 2, in terms of the annual declaration process for members, I think there's some progress that we need to make on that front. It was the first time that we'd attempted to implement that process. It did come in slightly late, and I think that was an issue in terms of getting that information back from all members. We're embedding this a lot earlier in the process, for 23-24, and we hope that via a little bit of training that we'll get over the line a lot earlier on that this year. So I think from my perspective, to sum up, as I say, don't want to take the focus off what is another pleasing audit report. A huge amount of thanks go out to not just the finance teams, but all of the teams in the council that feed into this. The finance team just brings this together as a conclusion for the accounts. That wider piece of work is ongoing throughout the year. There are some learning points, as I said. We'll always look to embed those within our processes, and I guess helpfully this time around, this audit concludes as we're starting preparation for 23-24, so it's fresh in the mind. So I think I'll leave it as that, Chair, and happy to hand over to Rachel through yourself to comment.
Okay, John. I was going to go straight to Rachel, but Phil wants to come in. Phil, do you want to pick up?
Just for clarification, really, John, with regards to the, I assume not so much a miscoding, but a different coding on the capital expenditure before it found its way to fixed assets prior to revaluation. You say that was a matter of interpretation. Was it just interpretation, or was there a rationale behind it?
This is in relation to what we term non-enhancing capital expenditure. So expenditure that doesn't enhance the value of our assets directly. The regulations and guidance since those requirements came in 2008 were quite loose, probably until around 2016, where they were firmed up. I think our interpretation was probably based on that early time between 2008 and 2016. What it does do is mean that there's a slight variance between two unusable reserves, which isn't a material impact for the user of the accounts. But I'm happy that it's certainly an interpretation issue for us, rather than something that was inherently wrong for all of those years previous. So happy with that.
But we've stepped into line now anyway.
Yes, absolutely, from this point forward, yeah.
Thank you. If I could turn now to Rachel, please. Over to you.
Great, thank you, Chair, and thank you, John. Thanks, John, for starting to explain the non-enhancing capital expenditure issue for me as well. So I'd firstly like to thank John and Dan and the finance team and all those involved in pulling the accounts together, and the supporting working papers. I should sort of set out that these were a good set of accounts and a high quality set of working papers. We certainly couldn't do our job without the support of the finance team and other colleagues at the authority. So yeah, and just to reflect on, on what I believe is a very positive working relationship between both teams. And good news, I suppose, we are proposing an unqualified opinion on the accounts, and the Auditor General is due to certify those tomorrow afternoon, following approval in the committee. However, as John's alluded to, there is one significant issue that we would like to bring to the committee's attention. The reason we want to bring it to your attention is, although we've concluded it's not material to the accounts, we did have to seek technical advice on it, and it was something that took quite a bit of time for us to work through and think through it and make sure that we'd properly considered. So it is quite a technical area that I will try and take you through and try and explain as clearly as I can, but appreciate that some of the language and technical terms aren't the most user-friendly to the layperson. So please ask, for any points of clarification at the end. Happy to take those. So this relates to the council's treatment of non-enhancing capital expenditure. So this is expenditure that's capital in nature, but doesn't enhance the value of those assets. So this expenditure should be recognised on an asset by asset basis and then impaired against that specific asset. However, the authority's interpretation was to recognise that as a job lot, if you like, so all of that non-enhancing expenditure in one go and impaired in one go rather than against individual assets. So this doesn't cause an issue in the year of that expenditure, but in subsequent years it results in a misclassification of revaluation gains if that asset is revalued. So revaluation gains should reverse previous impairment losses. However, because those impairment losses or those impairments of non-enhancing spend weren't posted to individual losses, they can't be matched off when a subsequent revaluation happens. So the result of that is that the full gain is posted to the revaluation reserve rather than a portion to the income and expenditure statement and the balance to the revaluation reserve. This all does come out in the wash, if you like, via a transfer to the capital adjustment account, so there is no bottom line impact to this error. It is a misclassification between two unusable reserves, between the capital adjustment account and the revaluation reserve. So in year, we identified the maximum error was 1.4 million, so not material. When we consider our materiality threshold of 3.6 million. However, the maximum cumulative impact we identified on the revaluation reserve was 10.3 million. So what we did is we went back to the standard definition of materiality. So whilst we place a figure on materiality, that's more for practical terms when we're going through the audit to determine whether errors should be adjusted or not. The standard definition is whether an error or the omission of some information would cause the users of the account, so taxpayers, to be misled or to change their decision-making processes based on those accounts. So because this is a misclassification between two unusable reserves, so the balance sheet overall is correct. There's no impact on the authority's capital financing calculations or the council tax calculations. The amount of council tax an individual pays isn't impacted by this error. We determined that it wasn't material to the financial statement, so no prior period adjustment was required. In addition, it would have been impracticable for officers to go back and correct this retrospectively, and International Accounting Standard 8 does allow or does give consideration for the practicalities of amending such issues. As John's alluded to, this would go back to 2007-2008 when the revaluation reserve came into existence. You're not required to hold records for that long, and the fixed asset register, it's not the easiest to interrogate. Going back over multiple years, there would have been a number of assumptions, I'm sure, if it were corrected, that probably wouldn't have got to a more accurate picture in place in the end anyway. However, we have recommended in Appendix 4 that the treatment is corrected going forward. So hopefully that makes some sort of sense for you, but please shout. But the bottom line is we're content there's no material impact for the accounts or for council taxpayers. So we're content that to provide an unqualified opinion despite this issue. I will then jump to Appendix 3, which is the summary of corrections made. I won't go through each individual issue, but if anyone wants to raise any queries or comments on them later, I'm happy to take those. But just to say, as John's mentioned, none of these have an impact on your surplus or deficit. They were all sort of disclosure or narrative issues, things that such as misclassifications between different categories within a note. Whilst there are quite a few corrections, these aren't things that give me cause for concern. They're not keeping me up at night by any means. There's no sort of concerns over the fundamental controls or quality of the accounts. These are a large, complex set of accounts, so we're bound to identify something. And in addition, as John mentioned, we were looking at things through a different lens, through a more robust lens this year because of the revised auditing standard ISO 315. It was a new approach this year, and we were more in depth in certain areas, which I think is what's brought some of these fixed asset register issues to light. Whilst it might be disappointing for John and the finance team, it's actually quite pleasing for me that the changes to the auditing standard have resulted in a higher quality audit and a higher quality set of accounts at the end of that process. It's done what it intended to do. I'll finally just touch on each of the recommendations made. As John's mentioned, management have accepted these in full. The first relates to that non-enhancing capital expenditure issue that I've already discussed. But management have agreed to amend that treatment going forward, so to recognise that expenditure and those impairments on an asset-by-asset basis. Secondly, we've got a follow-up recommendation to what we raised last year. So whilst it was pleasing that an annual process of declarations has been brought in as part of the annual accounts process, it was disappointing that perhaps some of those changes haven't been fully embedded and understood by all. So fingers crossed this will be improved for the 23-24 financial statements. It would really improve the efficiency of the audit process if they're all received up front, so we can work through them without too much back and forth and chasing. And finally, the third recommendation results to the fixed asset register, fixed assets again. So this relates to how fixed asset additions are treated. So they are posted to the fixed asset register after revaluations have been posted. Now, the code requires that they're posted before revaluations. So this means that expenditure in year isn't considered when revaluing assets, sorry to bring it to more layman's terms, and could result in property valuations being overstated. We were content that there was no material error in year, but we have recommended that treatment is corrected going forward, and those additions, that capital expenditure incurred in the year, is posted ahead of revaluations of property being posted. I'll leave it there. Apologies for the overly technical nature of that, but I'm happy to take any questions.
Okay, thank you, John. Thank you, Rachel. We've got a Sarah first, please.
Thank you, Chair. I was actually trying to take my hand down as I think most of the I've had most of the answers to my questions, particularly with regard to this issue of the non-enhancing capital expenditure, which I eventually think I got my head around. And I know you're not wanting questions on the content of the accounts at this meeting, as that's been looked at previously. Just one little note, we've got in the list of schools that we still own a special school. I wasn't sure whether that was because we still have a site or was it because it was text was brought forward from previous years. So there was just that one note, and noting that the deadlines weren't hit for the accounts this year, how or for these accounts, how are we feeling about that for this year?
Thank you. John, are you in position to take those questions?
Yes, thank you, Chair. We'll have a look into the school question. I think we just need to remember that this goes back to the 2022-23 accounts, so it may be that there was still an interest, I guess, at that stage. So we'll double check that one. In terms of moving forward, I think a lot of our ability to I guess improve timeframes this year is going to be dependent on sufficient resourcing. That's not just within finance; it's across the board in some of those other services that support and provide information into us. I think it was pleasing for 22-23 that we delivered, I think, draft accounts 3 weeks earlier than the previous year, despite all those limitations in resource. I think a lot of the progress this year will be in that pre-planning stage, so we're just starting to get into that process and identify maybe where some of those weaknesses were around, and hopefully make some efficiencies through that. But I think what has been helpful, I think it's both helpful and a risk for us, is that we've had a settled finance team for quite a while. So they are experienced, and I think have been able to manage some of that pressure that we've seen in terms of collating the necessary information. But we can't rest on our laurels within that. They are experienced, but that could change at any time. So we have to have measures in place to mitigate that, and that's what we'll be looking at in this pre-planning process.
Thank you. Yes, it's great to see a clean audit and a remarkably clear set of accounts.
Agreed. Martin, please. Yes, go Martin, and then go to Rachel. Martin.
Yeah, thanks, Chair. I think congratulations should go both to John and his team and Rachel and the team for getting these over the line. As I said, the accounts continue to be an extraordinarily complex set of accounts. And what the lay reader makes of this, I'll never know. But if there are any readers of these accounts, nevertheless, I count myself among one of the people who did read it. And a piece of pedantry, page 16 of the accounts, page 22. There's a sentence which trails off. I don't know if it's possible to address it before we get signed off tomorrow, just because it's the very, very bottom of the page and it doesn't run into the next page. So. This is the Chief Internal Auditor's statement of opinion. It says this is achieved through a risk-based plan of work agreed with. And then it hangs there. So, I mean, if we can get that tweaked, that'll be helpful. My question really for Rachel is that I know we didn't meet our deadline, but I'm aware that lots of people didn't meet their deadline. It would be helpful to have an understanding of where we sit in the league table of accounts that have been signed. I hope we're not last. I know we're not first.
Yeah, thank you, Martin. Actually, that's why I put my hand up was to come in on the timetable and deadlines as well. So I'll cover both in one go if that's okay. So no, certainly not last. We are still working through a number of maybe 7 or 8 local authority audits for 22-23. So no. I would say middle of the pack, and I should reflect on the fact that we did have a revised audit approach this year. We were starting with a blank piece of paper when it comes to our planning work. So we're not any later than last year. We've not lost any ground. So, and the work was was completed a few weeks ago. So if the committee fell earlier, we might have signed off slightly earlier than last year, but we are 2 days different to last year. I'm hopeful next year that we will be able to pull the audit process back somewhat. There is a letter due to go out to the local government sector. I won't preempt what that's going to say, but basically because we've got to grips with the revised audit approach this year, there should be efficiencies that come out of that. There are things that we understand better about what the revised standard requires. We can roll things forward and update as opposed to starting from scratch. So I am hopeful that we can bring it back to the other side of Christmas, certainly for the 23-24 accounts.
Thank you. Any other questions? No, any other questions or comments at this stage? Peter Davis, Deputy Chief Executive.
Thank you, Chair. I guess this is my opportunity, as much as other members of the committee, Rachel and Audit Wales have commented, I guess, and words of thanks, I guess, to John and Dan and finance teams and more widely. I guess this is my opportunity now that Governance and Audit Committee hold that responsibility to approve the accounts and the conclusion of the audit. Previously, that was done at council, but I guess I just wanted to just echo those sentiments. I think more widely, but probably very specifically, I think, into John and Dan. And I think it's just worthwhile recognising, I guess, a bit of context, which I think the committee has obviously been fully cited and aware of. One is the point around capacity, and in order to be able to manage this within the flexibilities, I guess, of the extended timeline on the audit, which has caused some healthy tensions in our critical path and timeline, because notwithstanding the fact that the committee is fully aware of the challenges that we've had to face in bringing forward the budget as well. So, you know, I think that context is important, you know, and to come through all of that, you know, with a clean opinion and a pretty robust ISA 260 report, and thanks for that, Rachel. Really clear and easy to understand, but I think, John, I guess you'll benefit, I guess, from, you know, the points raised out of the audit process, and we'll obviously take that forward in terms of driving further ongoing improvement. You know, to Rachel's point, I think just in terms of the strength of the relationship, I think, yeah, it is strong, and I guess we need to maintain that flow of communication, I guess, just in terms of our forward planning, based on the challenges that I know you're facing in terms of being able to balance, I guess, you know, your portfolios of audit work, not just for local government, but against health and elsewhere. So, you know, we'll continue that conversation on, and obviously look to manage flexibly as we have done going forward. So thank you.
Thank you, Peter. Thank you, John and Rachel. Okay, I'm not seeing any other sort of questions or comments, so I think we'll look to wrap up. Okay, so just to echo the points made by several people over the last few minutes, it's really pleasing to see an unqualified audit opinion, and that's testament to the work of John and his team, and of course Audit Wales. To pick up on some points already raised, this committee continues to be concerned about the pressures on the finance team and whether those are sustainable over the medium term. And of course, there are sort of concerns as well about staff welfare more generally, given the pressurised environment. I'm very grateful to the work Audit Wales have performed, the robust audit of the accounts, and the positive opinions they're given. And I do, as well as this committee, takes comfort from the nature of the issues identified, and that those issues identified were corrected in the final accounts. As Appendix 4 to the ISA 260, there are 3 recommendations which management have accepted and agreed to action by, I think, 1st of April. John, could you just confirm to this committee when it would be appropriate for this committee to have an update in terms of whether those actions have been fully addressed, please? Is it at some point during this year, or would you view it sometime towards the back end of the auditing process? Hopefully it was a clear question.
Thank you, Chair. I think, you know, clearly those are, you know, quite specific areas of work that we'll be looking to embed from 1st of April onwards. I think probably the most appropriate update point would be when the draft accounts come forward to the committee, you know, before summer recess, and we can look to update at that stage to highlight that you know, those have been fully taken into account and embedded in the process.
Okay, that was clear. Wendy, would you be able to add that to the forward work programme for the committee, please? Okay, so we've been asked to approve the accounts, and I think it is a view of this committee that we are content to approve the final audited Monmouthshire County Council Statement of Accounts for 22-23 and sign the letter of representation. That is, of course, subject to the minor tweak which Martin identified at the bottom of page 16. If that could be actioned before we sign off and publish those accounts, please. Thank you, one and all. We'll now move on to item 7. Item 7 is the Q3 Treasury report. John, is that you or Dan to present that report, please?
Thanks, Chair. I'm sure Dan would jump out of his seat if I asked him to present it today, but yeah, I'm happy to take the committee through it. And first off, that's probably the opportune moment to give thanks to Dan for really kind of embedding this quarterly update process for the committee. This is new for this year, and I think it's working well. Certainly in terms of the conciseness of the report, and those helpful key messages up front that I guess cut through what can at times be quite a technical report. I think overall Q3 represented I guess a relatively stable period for us in recent times. That's probably flows through in terms of some of those key metrics that are shown at the top of the report. The one or two items that did shift, I guess, significantly were in terms of inflation and also some of that impact upon borrowing rates, although I think it's fair to say that was a temporary adjustment in terms of those borrowing rates. That's the 10-year gilt yield in row 3, which has since, I guess, restored back to perhaps where it was at the start of that quarter. I think in terms of our investment portfolio, we've touched upon there that there's been a move slightly back towards money market fund investments. We did find that returns were comparatively higher over the period than perhaps some of those government investments that we'd moved towards previously. Whilst that said, the period's seen a significant reduction in all overall investment balances. So whilst proportionately we have more within money market fund investments, in terms of value, that isn't significant. We have got an upper limit on those values that we are putting into money market funds. Because there is, I guess, a negligible amount of increased risk in terms of bail-in risk. During the period, we had a further lender exercise their option in terms of one of our LOBO, which is a lender option borrow option loan. They chose to exercise their option and requested an increase in the rate on the loan. We chose to repay that at nil cost, and I think pleasingly we're able to refinance that at slightly lower than the prevailing rate on the loan, which was a good outcome. It gives us I guess more certainty as we go into the future. We're not exposed to that variation in rate because it's been replaced by a fixed rate investment loan. Sorry. We have opened a specific environmental, social and governance product during the period. So members will be aware of our move towards an increased ESG commitment over the medium term. That fund has offered returns marginally lower than non-specific funds. But I guess, as the report outlines there, it gives us a degree of proactive approach to identifying products that are specifically looking to move away from some of those vehicles that had been highlighted by the committee previously. I think I mentioned that investment balances have reduced considerably over the quarter. That's reflective of the continuation of the internal borrowing strategy. So we're utilising council reserves and balances before borrowing. We are still within an expected period of reducing interest rates, so it makes sense to continue at the moment with that approach, albeit a risk-balanced approach to that. We have limits and indicators that ensure that we're not exposed to undue risk within that. I think finally, just to touch upon our pooled fund investments, it has been a discussion point at previous committees. We have seen improvement in the overall capital values during the period. That's reflective primarily of the improvement in some of those markets that we've seen. And similarly, we've seen further improvement since the end of the quarter. So we're keeping a close eye on those. We still do have net unrealised capital losses, but I think as we've informed committee previously, these investments were taken with a long-term view. They've continued to provide excellent income returns to the authority. So, an annualised average of just under 6% during the period, which is, significantly higher than some of those cash returns that we've seen. So continues to prove a useful vehicle for us. I think that's the main points. I think, hopefully quite a concise report, and hopefully gives the committee a good eye on those changes that we've seen during quarter 3 of the year.
Yep, thank you, John. We'll go to now questions. Rodri first, please.
Thank you. It mentions in terms of the LOBO that's been paid off, it repeatedly says about having a lower rate, but it doesn't tell us what it is. So I do wonder if that would be helpful to give us better context, because obviously we must be pleased that it is at a lower rate. I was also wondering, it says about the £3 million LOBO is unlikely to be called in, but in the Treasury, Capital and Treasury strategy, later on it says that they are likely to be, it says there is a good chance they will be called in. So I just wondered what the current situation is with that.
Yeah, thanks. So sadly, I think I know the actual rates off the top of my head. So I think the loan that was repaid was at a prevailing rate of 5%. That was intended to be varied to over 6%, but we refinanced at just shy of 5% with a fixed loan instrument. So that's a pleasing outcome. In terms of that discrepancy in language, I think that's reflective of just the timing of these reports being brought together. We can have a look at that, and certainly if it needs to be amended in the strategy document that is going to go forward to council, we can look to make that tweak. So thanks for pointing that out.
Okay, may I check members whether they have any further questions or comments at this stage?
Just one quick comment, Chair. Is it worth just clarifying? I mean, we all understand it, but when it gets to full council, on the pooled investments, those unrealised capital losses would only be if they were cashed in. Just wonder if it's worth making that clear. Just a comment.
Thank you, Chair. So I think it's a good point. Yeah, we've spoken previously in the committee, and I think you're right, Councillor Murphy, that the committee's aware of that fact, but maybe not so in terms of when it goes forward to council, which the strategy will do. The Q3 report won't. As I said, we're keeping a close eye on that. There is potential for those regulations to change in the near term, so we need to keep close to that. But you're quite right to raise the point that those are unrealised to the point that we look to dispose of those.
It's just that people are sensitive to the word losses, and they're not losses really.
Yeah, agreed. Okay, there doesn't appear to be any other questions at this stage, so let's look to conclude this matter. I beg your pardon, just seen Sarah coming at last minute. Over to you, please.
I was puzzled by the authorised limit and that was set by the authority, or have I misunderstood that?
So the authorised limit will be set by council before the start of every year. So that is the absolute limit that we can borrow to without going back to council to vary it. One of the indicators within the Treasury strategy that is on the next agenda item gives us what's called an operational boundary, which is a kind of management tool to assess that level of borrowing against the limit. But it's absolutely within our ability to set that, and it's for council to deliberate upon and set prior to the year.
Thank you. Thank you. So it's a parameter set by council rather than set externally, although I'm sure that there are good practice benchmarks for it. Thank you.
Okay, thank you. Right, let's look to conclude this item then. I would just really echo John's points, but this paper is excellent. It's concise, it clearly sort of draws the reader's attention to key messages, and it is absolutely sort of really top notch. If I may sort of look to conclude by saying, this committee has now considered this paper, reviewed the Treasury management activities and performance achieved in the third quarter of this year. We note continued compliance with relevant policies and standards, and that the performance as set out in the paper is broadly in accordance with expectations. So on that basis, we can note this paper. Thank you, John. Thank you, Dan, for the paper and the voiceover. We will actually now move on to item 8. Item 8 was to be a paper on the statement of the robustness of the budget process and the adequacy of reserves. You will note we don't have a paper, and that is because Peter Davis, Deputy Chief Executive, and I had a conversation, I think, earlier this week. And I'll hand over to Peter at this point to explain where we ended up, please. That'd be much appreciated.
Thank you, Chair. So I think probably useful just to give a little bit of context first off. I think there's not an absolute requirement for the statement that I have to make and I'm required to make as part of the budget setting process. As a responsible financial officer, I need to put alongside the final budget proposals a statement on the adequacy of reserves and the robustness of the budget process. We've introduced, I guess, 2 years ago, I think it was the first time that we brought a paper into Governance and Audit Committee in an attempt to try and allow some scrutiny from Governance and Audit Committee on that statement. We didn't achieve that last year, and again, because of the acuteness of the timeline, and if I just work through the mechanics of the budget, in order for me to obviously draw my final opinion on the budget, I need to be abreast of the final budget in its full glory. Certainly in terms of the dates, trying to adhere to the dispatch deadlines for the agenda for the Governance and Audit Committee, which was coming up right close behind the dates for Cabinet and Council. It became clear through last week that I wasn't going to be in a position to obviously finalise the statement and certainly to bring it on a timely basis through into Governance and Audit Committee. Certainly not without breaching timelines in terms of giving you satisfactory notice in terms of working days. So, as the Chair's alluded to, I had what was a sensible conversation, I think, on Monday, and it was taken on board, actually, some feedback that the Chair and the committee had provided when we brought this through 2 years ago. And I think it was yourself, Chair, who made the comment back then, which was, in a constructive sense, a comment to sort of say that asking for the committee's opinion at the very back end of a process that's already concluded is probably not the most constructive and purposeful use of the committee's time. So if the committee's going to purposefully engage in some added value sort of input and work, that needs to be nearer the front end of the process. The important point to add here is, again, within context, we're going to be looking to move very swiftly off the back of the final budget being taken through Cabinet and Council, which will be next Wednesday and Thursday. We'll be very swiftly moving through then, almost to try not to allow your shoulders to slump, John. But we will be coming straight off the back of the budget and then going straight into the work around the financial strategy. But I think that's been made known to the committee in terms of actually knocking back and deferring the draft financial strategy coming to the committee. The conversation I had with the Chair earlier in the week is to give some really sensible thought to, I guess, the step process through now, because I'm expecting, a lot of significant work to be done across the months of March, April and May in order to bring that to a point of finality. It is a role of Council in the Constitution. It is only Council that can approve the financial strategy. And as I said to the Chair earlier in the week, I'm very keen to sort of engage Governance and Audit Committee at the right points in time, so not to bring it right at the back end of that timeline as a fait accompli, but actually to bring some of the initial outline thinking, so that we can get the purposeful input of a Governance and Audit Committee, to look at the things that they and only they can offer a view and a lens on, and to make sure that I guess we're on the same page in terms of as that construct comes together. So I think, but I'm sure, Chair, you offer your own input. I think that is a much more purposeful use of the committee's time. And ultimately, when we sort of step back and reflect on what my responsible financial officer opinion is, and we talk to adequacy of reserves, we talk of the robustness of a budget process, that is encapsulated and goes beyond in terms of a financial strategy, but also a medium-term financial plan. That's the intent. I think we got into, a comfortable position that was a sensible way forward. And obviously I'll work with the Chair now outside of the committee meeting and in terms of sharing some of the thinking in the next couple of weeks, just so that we can align, I guess, committee dates over the next 2 to 3 months with the work that's going to look to come through on the financial strategy. So thanks, Chair.
No, thank you, Peter. Much appreciated. And I do, just to confirm, so welcome the opportunity to work with Peter and John and team over the course of the next few months in terms of developing this financial strategy in a more purposeful way than we've done in previous years. So I'm very supportive of the work as set out. Are there any questions or comments on what's been proposed here, please?
Only to say that I agree. It's the best way forward. I think there's a lot we can do on the medium-term financial plan. It's a different beast than the actual budget presentation, isn't it?
Thank you, Phil. Okay, I'm not seeing any other questions or comments, so we'll move on. Once again, thank you, Peter. I look forward to working with you and the team over the course of the next few months. We'll move on now to item 9. Item 9 is the Capital Strategy, Treasury Strategy and MRP Revision Report. Arguably the highlight of today's meeting. And I know I've been sort of dying to get onto this agenda item. I know John has as well. So without further ado, I'll hand over to John to introduce the item, and then we'll take questions and comments.
Thank you, Chair. I guess Chair, an open question to start. Quite chunky items. I know. Just wondering whether you wanted me to take them one by one, because there's 3 substantive items within this, as you've outlined. I'm just wondering whether questioning may be more appropriate after each item.
Yeah, it's only a thought, but it might help John if I ask the question that I have on the MRP before he actually comes up with it, save him doing it twice, or are we going to have some sport with him?
Well, no. Ask your question first, let John answer it, and then I think, John, you've said that very sensible as a proposed approach. Take each item in part, and then we'll do a wrap-up at the end. Over to you, Phil.
Okay, forgive me if my memory is fading here, but several budgets ago, Mark Howcroft brought forward an amendment to the way that we dealt with the MRP. And I think I'm right in saying that we went from the annuity rate to a fixed rate over the term of the asset. I'll stand corrected there, but there was a change, and we got $1 million or so out of it, and I think the following budget we got a little bit more. And something in the back of my mind says that there was some sort of time constraint on how often you could do that. As I say, all of this is in the back of my mind really, and I'm just seeking clarification on it, because the report doesn't pick up on the fact that we've altered it before. We appear to be going back, so I think that's what's in my mind. But as I say, it's starting to fade in the midst of time. So I bow to your current knowledge.
Okay, thanks, Chair. So, yeah, okay, I'll touch upon that as we may go through. I think first off, just to identify, there is a mistype at the top of the covering report. It's a revision to MRP policy in 2023-24, not 2024-25 as it states twice there at the start of the covering report. In terms initially of that change that we made in 2016-17, I think we've touched upon that in the actual appendix 1 to the report, that we made a change at that time for supported borrowing from a reducing balance method, which would effectively have never set aside the amount of minimum revenue provision that was needed. There would always be a balance continuing, to an equal instalment approach. So effectively, the balance of our liability over 50 years at that time. So that's the change I think you're alluding to back in 2016. So that effectively takes us to the position that we currently are today. And this change is looking to, instead of go with an equal instalment approach, we're looking to go to an annuity method. So I think perhaps where some of that confusion comes from is that we also made a change to our unsupported borrowing method of calculation. I think that's probably the second
that's it. Thank you for
change that we made. So this is purely focusing on supported, so we haven't mentioned unsupported within that context. So if I go back, I guess, to the purpose of this, we have identified I guess an inefficiency operationally, where we have this discrepancy where we're treating our unsupported borrowing one way and our supported borrowing another way. So our unsupported borrowing provision is already on an annuity method. I think as the paper touches upon, we're looking to make this change in year, because Number one, it does provide budget savings to us in the earlier part of the repayment period. I think it's up to 2047. But also it looks to, I guess, tackle that inequality of charge that we're currently making on an equal instalment basis. And the report talks to that in terms of it makes no account of the time value of money, and therefore the additional burden that it's effectively making on council taxpayers now as opposed to those in the future. So this is looking to spread that burden and equalise that over all generations of taxpayers utilising the council's assets. So, you know, this is a significant change, as it was back in 2016-17. We haven't taken it lightly. We've taken inputs from our Treasury advisors, and we've also approached Audit Wales on the approach. I think the limitation, Councillor Murphy, you were talking about was potentially the additional legislation that came in place around 2018 that stopped authorities retrospectively changing their position on setting aside MRP and effectively banking gains in 1 year and going back and restating previous years. So that was the additional change that was made and restriction that was put in place. But obviously that doesn't affect this proposal as it comes forward today. So in terms of financial implications, I think as mentioned, there are significant budget savings through to 2047. What that effectively does is give us some budgetary headroom to keep services open, keep assets maintained, and keep them, you know, operationally there for future generations of council taxpayers. So I think, Chair, that pretty much covers all of the issues that we're trying to bring forward, and you know, I think it clearly outlines the reasons why we're approaching this in this way. It will bring consistency for us administratively for the teams. We also consider it you know, a prudent approach, and that may sound a little confusing, I guess, in so much that, you know, there could be a view that this is back-ending a charge. But I think it's important to note that this is one and the same charge, just being profiled differently. And I think prudent in this sense doesn't mean being conservative. We're effectively saying that we've set aside in previous years, and so far this year, more than we've effectively needed to. And I think this is about more accurately reflecting that cost over time. So, you know, the fact that this allows services and assets to remain open for future generations is prudent in that sense. So thanks, Chair. I'll leave it there for this item.
Yeah, go back to Phil.
Just one quick follow-up on that. If we find that it isn't working out as we hope, are we in a position to then swap back at any stage, or are we? Is this something that we need to sort of embed and just live with?
So it's the council's responsibility to set what they consider prudent provision. So I think you're quite right. I think the paper outlines that is something that we'll always revisit to ensure that, you know, we're making prudent provision. If the amount that we borrow or the amount that we look to support the capital programme with increases, then that may be something we need to look at. But it's right that we look to review this periodically, and we have that touch point set up with our Treasury advisors to do so.
Okay, thanks, John. Thanks, Chair.
Okay, John, thank you for that. We will go back to your proposed approach in a minute, but so all we think we're doing is taking the items in the slightly sort of out of order. So we're talking essentially about the MRP policy statement. Could you just repeat the point you made about, why several years ago you opted to choose the equal instalment approach for supported borrowing, but the annuity method for unsupported borrowing? I didn't quite understand the rationale at that point in time. Are you able to set that out again, please, John?
Yeah, thanks, Chair. So I think if I cast my mind back to that period, there was the annuity method was quite new to the legislation at that time. It was felt, I guess, nationally at that stage that it was a better fit with unsupported borrowing, and that authorities perhaps didn't have specific capital schemes that they looked to identify and apply supported borrowing to. I think as time has developed, that's changed. Systems and processes capture our capital expenditure a lot better. We're able to distinguish where that supported borrowing is being it's supporting capital schemes, so the information we have is better, and I think there's that appreciation that the burden upon council taxpayers from an equal instalment method does produce that inequality that perhaps wasn't identified if we go back 8-9 years as strongly at that point. So I guess to answer the question, why now, I think I'm not going to sit here and say that budget wasn't a consideration. It was, and as I've outlined, it gives us the ability to continue to support services while still making prudent provision. But I think administratively it solves some inefficiency, but I think above all else solves that inequality that we're seeing within the current provision that we're making.
So yet again, John, thank you for a helpful explanation. I don't disagree with the proposal. As I said, I'm just somewhat perplexed that you took the conscious decision some years ago to go with two different methods for supported v unsupported borrowing. You built an operational complexity which you're now looking to remove. But I understand in part the rationale you've set out. On a minor point before I turn to Martin, at paragraph 3.6, you describe the annuity method as being as resulting in more prudent provision. Could you just say a few words about why you think it's more prudent as opposed to being prudent, please?
Thanks, Chair. I think this comes back to the point that I made around the ability for us to maintain services in the short term. So if we wanted to, I guess, create an example, we're seeing a budgetary benefit that will carry into next year of just over £2 million. That enables us as an authority to continue with some services that may have needed to be turned off if we hadn't made this change. So, that is a prudent approach for us, and I think when you take into account the point around the time value of money and the burden that it's putting on council taxpayers in the short term, I think it comes back to that point around prudent not being conservative. It's making the right provision for the council over that long period of time that we're looking to make provision for with this borrowing.
Thank you, John. Peter, would you like to come in there, please?
Thanks, Chair. I think it's just to make just one comment, just by way of overlay, I guess, and I think it's been captured by John in terms of his inputs. So there are a range of methods by which we can obviously look to charge MRP that I guess would be looked at reasonably and favourably by Audit Wales, and the guidance that overlays all of this. So to the point of prudent, more prudent, we've obviously had a prudent, reasonable provision method for providing MRP in previous years. To the point of more prudent, I think John's explained that in his input. Because when you look at when you step back and you look at a more equitable distribution across and to the extent that that is met by future generations in a more equal way, an annuity method represents that. So I think that therein lies from my perspective at least, the answer to your question, Chair. That's the distinction, I guess. Prudent. There is a range of MRP options that we have. More prudent, because our view, as explained by John, is that what is proposed is the best fit option for us, the most equitable one.
Thank you. So I understand what you've set out. I get the equity point. I still don't understand why it's more prudent, but we will park that for the time being. Clearly, it's my lack of understanding, because the overall quantum of provision remains the same over the life of the asset. But let's go to Martin, please. Martin, over to you, please.
Very, very similar point, Chair. I personally don't think it is more prudent, but it's fairer. The total provision is exactly the same over time. And I think my question, I think, John, you've covered it off when I was trying to get around what perhaps you meant by prudent, that by not putting, let's call it £1 million a year, at least over the short, medium terms, into the provision, you're freeing up £1 million worth of effectively a saving to the authority. I think you've hinted there, John, that it gives you some flexibility in terms of funding other revenue services. I was going to ask whether that £1 million was going to be earmarked to fund additional capital, because when we get onto the capital strategy further on, there's clearly a gap between what we can fund and what we need to spend. So that £1 million is available to you, and as part of the budget setting process, you're going to make a decision as where that's best used.
Absolutely. It's given us the ability to think a little bit differently around priorities for 2024-25 budget setting. Part of that has been passported towards capital priorities, where Cabinet have looked to introduce some further investment in terms of highways infrastructure. So to the point, that has directly led to the ability to be able to do that. So, I think that talks to the point of, and, I get the point around maybe perhaps the wording being, it could be slightly clearer in terms of prudent or fairer, but certainly we can take those points on board and take that into council when this is considered next week. I think that's reasonable feedback. Certainly welcome those comments. But thank you.
Thank you. Let's move on to Sarah, please.
Thank you. I absolutely get why we need to do this, caught as we are between underinvestment from previous years and rising borrowing costs. But would I be right in thinking that it actually increases the cost of an asset over its life? Or have I got that wrong?
So the provision. So the amount that we set aside to repay our borrowing within the revenue budget is the medium revenue provision. So that replaces effectively the charge that we make during the year to repay our loans. So I think if you just think it through from a logical perspective, if we didn't replace it with an equalised charge, you'd have huge spikes year on year in repayments of loans, because some loans will mature in 1 year, you may have nothing the next. So council taxpayers would therefore be exposed to high variations year on year of loan repayments. So this looks to equalise that over the period that the expenditure relates. What this is purely doing is setting aside an amount of, if we scroll to the bottom, 90-something million, 83 million, over the remaining life. So this is borrowing that has supported our investment in the capital programme since the inception of the authority. And we're therefore looking to set aside for repayment of that over the relevant period. So, that is effectively what it represents. So I think that hopefully answers the question.
But in non-accounting terms, if we are paying off less this year and more in 10 years, 20 years, 30 years' time, does that not mean that we're paying more interest?
So no, we wouldn't be. We're paying off the same amount as we would do under the previous method. It's just within a different profile. This is purely as you mentioned, the accounting of that. In cash terms, these transactions will continue exactly the same, and the interest charges will be the same interest charges as they were before.
Thank you.
Okay, thank you. Let's move on to Colin, please.
Thank you, Chair. I was thinking that the principles behind this, they seem to be, what's attractive about financing, buy today, pay tomorrow, isn't it? But I also looked at the background to some of this, and it appears that this decision would make us something of an outlier. That this method, the move into the annuity method, is I think it was something like 4 councils out of the 22 were using that method. That was my research. It might be inaccurate. I presume you've done your own benchmarking for that, but I'm thinking there must be some reason behind that, and why that might be more or less prudent to stick with what we have.
So I think we did do our research. I think we're the 6th authority in Wales to move towards this approach. I think another 2 are likely to do exactly the same within this financial year. Across the wider UK, it will be much more widely used. I think it goes back to the point of, it's up to each individual council to make what they consider prudent provision. So I think for us, for all the considerations that we've outlined there in terms of reducing that inequality on the taxpayer in the near term makes sense, and the points that I don't need to go back over in terms of continuing to support services in the near to medium term. So that's the why. I think whilst we can have a view to what other authorities are doing, we're not in their shoes. They may have completely different approaches to their capital programme. They may be, investing a lot more or a lot less in terms of their borrowing commitment towards their capital programme. So that will significantly influence the approach that they're taking themselves as well.
Okay, thank you. Just one final point before we move on to other elements within this paper. Could you just confirm, John, that if we agree to move to this approach, that we have the necessary skills within the finance team and possibly broader in order to manage this approach effectively, please?
Thank you, Chair. Yes, we're our Treasury advisors, actively supported this approach with us since since it first became embedded within unsupported borrowing. It is a very technical area, but we've got a highly experienced team who've dealt with this for quite a while. It's audited every year as part of the external audit of the accounts, and the approach will be looked at. So we're happy that we've got that relevant expertise within the team.
Excellent, thank you. Okay, let's go back and pick up the capital and treasury strategies, John, and I think we'll give you a much easier ride now.
Thank you, Jay. I'll just find my my way back to the papers.
Our fault, I'm sorry, John. I'll blame Phil.
So I think in terms of these papers, they are quite stable in terms of year-on-year change. So these are annual strategies that come forward to the committee. They're quite mature now in terms of their development. The capital strategy has been with us for about 5 years since it was a requirement, and the Treasury strategy obviously a lot longer. In terms of the capital strategy, we've, I guess, tweaked it to better align with the asset management strategy that came to this committee previously. So we've looked to make sure that that's consistent and talks to the revised policies within that asset management strategy that were approved. So I think that's an important change for us. Whilst it's a stable document and there's been little changes, is a very important document because it sets out the context in which we make capital investment decisions, and it's been a key driver of the work over the past 2 to 3 months in terms of developing the capital budget for next year, 2024-25. The priority matrix embedded within this has been the forefront of those deliberations over the capital priorities coming forward. We're in a challenging economic environment. We have limited capital resources, so that makes this strategy and priority within it all the more important, because prioritising those resources to the correct areas is hugely important for us. I'm not going to go through each section within it. I know it's a lengthy document. It does highlight some important areas for us, as I mentioned, and some of those risks that sit alongside our capital programme. It is heavily linked with the Treasury strategy that follows it, so maybe I'll take them both as one, because as we've seen, borrowing is a huge part of our investment in the capital programme, and the impact that it has both on the Treasury management of the authority and the revenue budget. In terms of the Treasury strategy, again, it's a fairly stable approach to the approach that we've been using over the past few years. In terms of the minimum revenue minimum revenue provision policy statement. That is consistent now with the approach that we're proposing for that change that we've just been discussing, in so much that both the approach to supported borrowing and then supported borrowing are on an annuity basis. So there's consistency there with the approach that we're taking. In terms of our borrowing strategy, we're continuing and proposing to continue with a internal borrowing approach. So committee will know that that means that we use our internal reserves and balances in lieu of borrowing, and only look to borrow when absolutely necessary and when those balances are down to a minimum level. That has worked well for us over the past few years, and we expect that to continue to work well for us, as I mentioned earlier, with a expected reduction in interest rates over the financial year 24-25. In terms of the investment strategy embedded within it, little change to that. I think the investment vehicles that we've been using have been appropriate. It's given us the flexibility, I guess, that we need as a Treasury function to manage the investments that we have, and I guess has given us an appropriate level of risk exposure to the various investment vehicles that we've outlined within the strategy. Just to touch upon, I think, the environmental, social and governance approach, we are continuing to embed that through the year. We've identified the 3 charters that we will be continuing to monitor the banks and funds against. And we'll continue to identify, I guess, more ESG-specific investment vehicles where they can be found, and keep governance and audit committee informed as we report quarterly to you through the committee cycle. So, Chair, I think I'll leave it there. As I said, quite chunky strategies, but I think helpful documents to the committee to gauge where we're looking to take things during 24-25.
Okay, thank you, John. That was very clear, and may I commend you and the team over the quality of the papers. You made a highly technical subject relatively easy to understand, so my thanks. Can I just check with members for any additional questions or comments with respect to the capital or treasury strategies, please? Rodri.
I only had one. It was only one minor one, and it was about clarity on the committee's role. In 5.4 and 5.5, it says about us reviewing and scrutinising. However, in the purpose at the start in the opening paragraph, full council delegates responsibility for the detailed implementation, monitoring, and strategy. So, just wanted some clarity on what we mean by detailed implementation in the purpose at the start.
Okay, so I think thanks for raising perhaps that inconsistency in wording. I think the purpose at the start certainly outlines how I perceive the committee's role to be within Treasury management. So effectively, as you've outlined, Council delegates that responsibility, not just to the committee, but obviously to the Section 151 officer and the team underneath to implement. So I think if there's a tweak to wording that we can make there to make that clear, I think that'll be welcomed. Yeah, thanks.
Okay. I'll look to conclude this item then by making a couple of remarks. So just talked about the quality of the papers, so once again, thank you, John. There are some important messages embedded within this document. I draw members' attention to paragraphs 6.5 and 6.6 under the heading Ongoing Capital Programme Development and the consequences for the Council in respect of the proposed capital spend over the period. I do note as well, and I think it's important to note for the record, that we are clearly cognizant of a very challenging financial situation, high levels of uncertainty, and the Council's understandably low levels of risk appetite. Clearly that has framed these strategic documents. So, following review, this committee has carefully reviewed the proposed change to MRP policy in year and are content with these changes and recommend their approval by full Council. The committee has reviewed and recommends the draft capital strategy be approved by full Council. And in respect of the draft Treasury Management Strategy for 24-25, inclusive of the MRP policy statement, they have considered those matters and is of the view that it provides a robust, appropriate and flexible framework, and yet again recommends its approval by full Council. Subject to any further comments, we will look to move on. Thank you. Let's move on then, please. And John, I think you're done, so you can take a break. We move on to item 10. Item 10 is the self-assessment and performance management, and I do hope it's Richard Jones to present on this item. So bear with us one moment where we change seats. Okay, Mayor, so welcome Richard Jones, our Performance and Data Insight Manager, Hannah Carter, Performance Analyst, and Matt Gatehouse to the meeting. So Richard, please take the paper as read. I thought the paper was excellent, but just really sort of maybe highlight for members the key points within the paper. Many thanks.
Yeah, thank you, Chair. Good afternoon, everyone. So here to present today the report on the effectiveness of our performance management arrangements, which is to inform one of your important responsibilities around seeking assurance of how effective our performance arrangements are. Our performance framework, as a quick reminder, is the way in which we translate our purpose into action and ensure that everyone is pulling in the same direction to deliver the Council's outcomes. We structured the report under some of the main elements of our framework, so our wellbeing objectives, which are set within the Community and Corporate Plan, our service business plans, self-evaluation, performance data, and our strategic risk management arrangements. For each of those, we've undertaken a self-assessment of their effectiveness, and to frame that, we've used some key questions. And for each of these, we've identified evidence we've used to assess how we know and how we've judged our effectiveness within the assessment. The planned actions we will take to improve, strengthen or adjust the arrangements and the timescales through which we will do so. We've produced a summary within the cover report at point 3.5 that outlines the sort of headline conclusions of the more detailed assessment contained in Appendix 1. I won't go through each line by line, but hopefully 3.5 gives you that summary. I think the one point I wish to draw out to the committee is, obviously this is a self-assessment. It's important it's robust, it's important it's balanced, it's important it's evidence-based, so hopefully you can see from the document that we've tried to draw in a range of evidence of both generated by the work we've done as a team and also the work that has been done by internal audit and external audit in reviewing some of our arrangements as well. So just draw out to the committee that in the last year we've had some audit reviews specifically focused on some parts of our performance management arrangements. So for our wellbeing objectives, Audit Wales have examined the Council's wellbeing objective setting and concluded that we've acted in accordance with the Sustainable Development Principle, and you received that report last year as a committee, which also identifies some areas we can strengthen. For performance data, Audit Wales have recently undertaken a review of our use of performance information. That report is currently draft. It identifies some areas for improvement within it and will be coming forward to the committee on its work programme in future, as well as our response to it. And finally, we've had an internal audit review recently concluded of our risk management arrangements. That report is similarly in draft, but again, we've had some feedback on our arrangements and have used that both to inform the self-assessment, and we'll be further using it to strengthen our arrangements as well. So just hopefully that gives you some assurance that we're aligning our own view with the view that is coming forward by those who helpfully support us in reviewing and auditing our arrangements as well. And finally, just to conclude where this report fits in with our annual self-assessment report that the committee receives. Performance, risk management, corporate planning is one element of that self-assessment report. So this will inform that section of the report and obviously will be updated with new evidence that comes in over the next few months, and that's likely to be presented to you later in the summer. So that's a quick summary, Chair. Happy to take any questions.
Okay, thank you, Richard. Okay, so questions or comments, please? I think you're going to get an easy ride, Richard. Doesn't appear to be any. So, okay. No, doesn't appear to be any. Okay, so thank you for the paper. I think the absence of questions really sort of reflects the quality of the paper and people's general comfort with what's set out there. I think it would be remiss of me if I didn't just say a few words about with the context of a current challenging operating environment, which we're all now very familiar with. The discipline of purposeful self-assessment and internal challenge is critical to improving performance right across the council. Essentially, we need to do more with less. And whilst you've set out, a good news story and we have a good firm foundation here, I think there's further work to do clearly to embed it right across the organisation, to empower officers to challenge themselves and the work of their team to ensure we keep prioritising on the right activities, and hopefully we can make some progress with that over the course of the next months and years, because I do think it's critical to the ongoing success of this council. We've been asked to, through the paper and Richard's voiceover, to further inform our understanding of the effectiveness of the operation of the authority's performance management arrangements. I think we have done, and I don't think we've identified any material areas for improvement. But I would ask you, Richard, just to note the points I've just made. Otherwise, I think we're good, and just to say once again, thank you to you and the team for the excellent paper. Good. Let's move on to item 11. Item 11 is the Whole Authorities Complaints Report. I'm going to check quickly who's introducing this item, whether it's Annette or Matt. Matt, it's you. Excellent. Matt, welcome to the meeting. Matt, over to you to introduce this paper, please.
Yeah, thanks very much, Chair, and good afternoon, members. Matthew Gatehouse, Chief Officer, People, Performance and Partnership. I'll open it up this afternoon and pass over to Annette Evans, our Customer Relations Manager, who will elaborate on some of the detail. Firstly, just to highlight, this complaints report has evolved significantly thanks to feedback from this committee and the time that the Chair has spent with myself and Annette looking at this issue. Previously, members will recall that it got into some of the detail, the service level detail of complaints. You rightly identified that the role of this committee was to oversee the effectiveness of the complaints report. So the version you see before you today is more structured around headings which enable you to form a judgment of that effectiveness. I'll touch upon that in a moment. The other thing just to say is the report is later in the year than we would normally like to bring it to you. So what we've done, and what Annette has done in particular, is rather than draw a line under this at the end of 2020, 31st of March 2023, you've got the data for 2022-23 and the first 9 months of 2023-24. Just obviously, and particularly for people watching at home, just to be pertinent to that, because when you're looking at that, obviously 9 months data versus 12 months is very different. And that particularly becomes of relevance when we're looking at things like the number of complaints escalated to stage 2, because you tend to see more of that happening towards the end of the year where things haven't been satisfactorily resolved in the first 12 months. So obviously we will bring a full update of the year to the committee when it's concluded for information, but just wanted to highlight that point. So just in terms of some of the structure and changes before I sort of pass over to Annette. So what you'll see under the key issues, it describes the role of the committee, which we've just covered, the accountability, where responsibility for that sits at both officer and political level. Sets out an overview of the process, both in terms of the whole authority complaint and the separate social services complaints report. It talks about the number of complaints and the timeliness of complaints. Now there are some tables in there. Those of you who also got your email open, I've tried to anticipate a question. Some of you will have noticed that there was an error in the table at 3.14 where the same data was reproduced twice. So I've just sent out a correction for that. So just to be clear, it related to historic data, not the data for this year. So apologies, that one slipped through the net. And there was also an erroneous sentence at the end of 3.15, which contained the figure 82%. Slipped through the proofreading, so please disregard that final sentence. The report then goes on to sort of talk about our views of the effectiveness of the process and some of the learning and evaluation. And Chair, with your permission, what I'll do now is sort of pass over to Annette, who will highlight some of the key issues within the report, and Annette is joining us remotely.
Hello, good afternoon, everybody. Yes, so for those of you that are not aware of the complaints process, the whole authority, there's the whole authority complaints procedure, and there's the social services complaints procedure. So with the whole authority complaints procedure, we have 2 stages, stage 1 and stage 2. Stage 1, we have to resolve complaints within 10 working days, and stage 2 we've got 20 working days plus a further 10 working days for the relevant head of service to respond to the complaint. For social services, there's a statutory requirement that, again, we have 2 stages. The first stage, the timescale is 17 working days, and the second stage is 25 working days. And for the second stage, that clock starts ticking after the complainant has agreed the contents of the complaint with the investigating officer. And for social services complaints, we always have to engage an external investigating officer. And if it's in relation to children's services, we also have to have an independent person who accompanies the investigating officer to ensure that everything is done fairly and in an unbiased way. So for the whole authority complaints, for the time frame we're talking about, there were 138 in the financial year, and then a further 115 complaints up until the end of December. And then there's no surprises that the areas complained about are those front-facing services, you know, the waste and street services, highways, housing and homelessness, planning, and revenue services. But I think what we have to take into account, because recycling and waste, you know, that's where the majority of whole authority complaints are received. But I think that we have to put it into perspective that there's 44,000 households in Monmouthshire. There's 2.2 million collections every year. So the 44% of complaints that we get about recycling and waste, you know, you need to put it into that perspective, really. There were 12 complaints that escalated to the formal investigation stage, and half of those are to do with planning. You know, people feeling that the planning processes haven't been done properly, or enforcement issues, or people perhaps who've had planning consent and then neighbours, other people think that you know, that other works are going on. So so like I said, half of them are to do with planning matters. And then with regards to social services complaints, for the period, we had 38 complaints. There were 113 comments and 111 compliments received. Now, social services complaints are far more complex than the whole authority. You know, it's one thing dealing with your missed bins. There's quite another when we're dealing with social services and we're dealing with families, contact arrangements, all sorts of things. Going back to whole authority then, with regards to the comments received, there were 361 comments. And that's where people don't want to make a formal complaint. They just want to highlight to us, oh, the traffic lights are not working, or the street light is out, or there's been a lack of road gritting. Those sort of issues, you know, they just want to bring them to our attention. They want us to sort them out as soon as we can. And we deal with them, you know, in the same way as we deal with complaints. We log and record them and ask the services to deal with them, but they're not recorded as a formal complaint. And then from April to December, there were a further 298 comments. So we do get a lot of comments from members of the public in relation to those services. It's good to see as well that we do get compliments. You know, people do take the time to say thank you when they feel that, you know, the staff have done well, that they provided a good service. So, you know, for those people who take the time to ring in or to email us, that's good to hear. And we had a further 228 compliments from April to December. Sometimes we get requests for service as well. You know, people, they come to us and they want to highlight something, but when we check, you know, they haven't requested that service. So we record those requests for service, and we dealt with 45 of them. Going back to social services then, so like I said earlier, you know, we had 38 complaints, 113 comments and 111 compliments. That was the financial year. And then up to December, we had further 35 complaints, 55 comments and 65 compliments. So social services complaints are generally in relation to communication issues, staff conduct and quality of services. So I've just run over there fairly quickly the sorts of issues that we are dealing with on a day-to-day basis in the complaints department. And I say complaints department as me and another member of staff. So we deal with these complaints day in and day out. So Yes, that's sort of an overview. If anybody wishes to raise anything, please do.
So, if I may, thank you, Matt. Thank you, Annette. Matt, I apologise. I can never remember your job title. It seems to be a real mouthful, so apologies for that. Look, I thought the paper was excellent, and thank you once again for taking on board the feedback this committee provided in respect of previous iterations of the report. Before going to members, may I ask Annette a question? So, beg your pardon. So I know how to raise a complaint with the council, but how do I sort of provide a compliment? What's the process for that, please?
It can be done in any way. It can be done by phoning or by an email, or we have a feedback form on the website, and the feedback form, it says that, you can raise a complaint, comment, or compliment. So you can do it that way.
Thank you. I'll need to look more closely at your website, because I think the process for providing compliments should have equal sort of standing with process for raising complaints. But that's a personal view, and maybe not a view shared by the whole committee. If you go to Tony Easton first, please.
Yeah, thank you. Good afternoon, Annette. I'm surprised that the Old Chestnut are coming to you with complaints that traffic lights not working and things like that are still happening. There seems to be something not right in the system that people need, or the public need to contact you rather than go direct to, say, highways and people like that who will deal with it quicker. Is this equally? You can also send them to the local library. Is there something missing on our website which creates a situation where people want to come to you rather than go direct to the source, which can be dealt with pretty quickly?
Yes, I mean, yeah, you talk about the traffic lights. There are other avenues that people can go. Sometimes they feel that they have done that, but they haven't had a response, and so therefore they come to me then.
Then becomes a complaint. Then becomes a complaint. Yeah.
It becomes a complaint if we don't, if it's not sorted out, quickly, really. Yeah. It's the same, I talk about missed bins all the time, because that's where the volume, yeah. And there's a missed bin form on the website, but people, when you haven't had your bin collected, you're frustrated. Oh, I'm going to complain about that. And they don't see that there's a missed bin form that they can complete. They'll think, right, I'm going to complain. I'm going to go to the complaints department. And therefore they fill in our complaints form. And that's the same with, a street light not working or the traffic light not working, that sort of thing. People get frustrated and they think, oh, I'm going to complain about this. And they look for it. They look to see how they can complain rather than go into other avenues.
Because a missed bin form won't get your bin emptied, not straight away. There are quicker ways of doing it than that. When for example, you've got somebody got doorstep collections and they missed out, a missed bin form, you've got to wait another week. There are other ways. The quickest way is go to the library, as far as I'm concerned, or come to me in my case where they know me. Thank you.
Or they come to me and then I ask the team if they will go and collect as soon as possible.
Yeah. Okay.
Okay. Thank you. Thanks for both. Rodri, please.
Thank you, Chair. A few questions, if that's okay. In terms of the stage 1 complaints and dealing with them within 10 days, you can see you do about 2/3 of them within the 10 days. I was just wondering around the process of, presumably residents get a notification back that that you hope to deal with something within 10 days. When it goes over those 10 days, do you have processes in place to keep them informed in terms of managing expectations? So you don't have escalating complaints?
We should acknowledge complaints and we should let people know. In practice, that doesn't always happen, I have to say, because the complaints are sent to the service area and asking them to contact the complainant and try and resolve their issue. And if they can't resolve their issue, to give them a timescale when they can. But unfortunately, due to workloads, capacity issues, we don't always do that. So, I do need to flag up that, yes, in principle, we should be doing that, but in practice, we don't always.
Okay, that's fine. In terms of the compliments and comments as well, is that specifically looking at the customer relations in terms of your face-to-face drop-ins and stuff? What I'm getting to is social media captured and considered in that, or is it every other form and excluding that?
Yes, it's every other form and excluding the social media. We don't capture the social media.
Yeah, that's fine. Only one other quick one. Obviously, you see you've run 6 training sessions for the last 2 years. I'm just curious in terms of, obviously, there's a big uptake in the first year. 93 people undertook training, 33 the second year. I was just wondering, was it front-loaded with people who are more likely to deal with complaints, and that's the difference? Or I just wondered why there was such a difference, and what can be done to encourage people to take it up next year when you run it again?
Yeah, the 93 was for the financial year 2022 to the 23. So the financial year March, 1st of April to the end of March 23. And then from 23, end of, I'm getting all confused now. So from the end of March to December, for that 9-month period, that's when the smaller amount of training took place, and that's because we rely on the Ombudsman's Office, the Complaint Standards Authority, the staff there. We go to them, and then they allocate to us when they can come and do that training. But the thing is, they provide training to all the local authorities in Wales, plus housing associations, plus the fire brigade, and now the health authority are on board. And they've only got a finite, number of staff to do that. So we just got to take what they give us, really. And our staff have given really good feedback on, the training that they've provided, and we always have a waiting list. So it's not about getting our staff to go on those training. It's just about getting the dates from the Complaint Standards Authority and being able to get as many staff as we can on it. Unfortunately, what happens, nearer the time is perhaps people do drop out for various reasons. But generally, it's a good take-up with the Ombudsman's training.
Thank you. David, please.
Thank you, Chair. Good afternoon, and good afternoon, everybody. Just a quick question to Annette, really. What actually makes a complaint, in the sense that if, for example, a ward member asks a question about a missed bin collection, as you've alluded to, that seems to happen occasionally. Does that, if I write in, for example, or I email Carl Tewig or someone, does that actually get formalised into a complaint then, that you add to the pile, or is it just dealt with internally by Carl's department?
Well, Carl's department should inform me if you've made a complaint so that we can log and record it. But then, if they feel that they can deal with that straight away, they feel that perhaps it's not a complaint because they can deal with it straight away, right, and there's no need to bring it to my attention.
Yeah. So should we copy you in, or does that skew the figures a bit too much?
You're more than welcome to copy me in, and then I can chase Carl then to make sure that that he's dealt with it.
Right. Okay. Thank you very much. Appreciate your clarity. Thank you.
Okay, thank you. I'm not seeing any other questions or comments. So once again, many thanks to Matt and Annette for an excellent paper and taking those questions. And I think in conclusion, this committee can be assured that the processes for dealing with complaints is broadly effective, with no material concerns or areas for improvement identified to date. Many thanks. Beg your pardon, Matt.
Chair, Chair, with your permission, can I just add something just to make sure that members are comfortable closing off the point on the action list earlier on, which was on the issue of waiting. It was remiss of me not to mention it. So there's a request from the committee around whether we consider a waiting, as it are some complaints more serious than others, should they be prioritised. Having looked at this with Annette, because we follow the Public Service Ombudsman's model complaints procedure, that doesn't allow for a differentiation between different complaint types. So much as we may think actually we'd like to treat that one more urgently than this one, we're not able to within the sort of remit of that scheme. So that's the reason it hasn't been adapted in that way.
Okay, thank you. Thanks for reminding us of that action. I'm content to close that action on the basis that Matt has set out a clear explanation why it's not reasonable to do so in this context. Okay, moving on then to item 12. Item 12 is the Internal Audit Quarterly Report. I welcome Jan Furek, our Chief Internal Auditor, to the meeting. Please assume we've read the paper, Jan, but please nonetheless pull out the key points.
Thank you, Chair. Yeah, so this is my regular quarterly report into Governance and Audit Committee, considering the adequacy of the internal control environment within the Council, based on the outcomes of our internal audit reviews and opinions issued up to and including the 31st of December 2023. The report also details the performance of the internal audit section during the first 9 months of the current financial year. So the internal audit team abide by the public sector internal audit standards, which came into force in April 2013 and was subsequently updated in March 17. The revised global internal audit standards were published in January this year, but we're still awaiting confirmation on how the public sector standards will be affected by this. In the meantime, to ensure compliance with the current standards, an external quality assessment of the internal audit team has been arranged to be undertaken during Q4 of this financial year, and I've been told we're due to receive the draft report shortly. So since the start of the financial year, the internal audit section has completed 31 jobs to draft stage from its operational plan, 22 of those being opinion related, and those opinions are shown at the table in Appendix 1. Appendix 3 of the report gives the detail of the section's performance indicators as of the 31st of December, and the audit and 50% of the audit plan has been completed, which is on the profile target. In addition to the audit work completed within the plan, an additional 5 unplanned or reactive audit reviews have been undertaken during the year so far. 3 of these warranted an audit opinion being issued, and those are also included within the table. So since the start of the year, we have issued the following opinions: substantial assurance, 7 audit reviews; reasonable assurance, 10 audit reviews; limited assurance, 5 audit reviews; and 2 unqualified grant audits and 1 qualified grant audit. 1 limited assurance and 1 qualified opinion has previously been brought to the attention of the committee during previous meetings, but today I'm bringing to the committee's attention a further 4 unfavourable opinions which were issued during Q3. The details and individual weaknesses as to why the reviews were considered by the audit team to be of limited assurance is included within Appendices 4 to 7 of the report. But in summary, adult commissioning. The audit identified several strengths in each of the areas reviewed. However, there were some fundamental weaknesses identified which needed addressing. These weaknesses included the absence of a commissioning strategy, non-compliance with contract procedure rules in the procurement of key services such as domiciliary care, and adequate evidencing and reporting of monitoring visits which form a vital part of the quality assurance framework. Till float analysis. The audit attempted to agree the till float records held on the Council's financial monitoring system Business World to the actual balances held at each site. The account holders were asked to complete and return a reconciliation of their floats, which were held on site at the time. It was found that some returns did not agree to the central record, and overall there was £455 less than expected at the sites. Employee mileage. The audit identified 1 weakness considered to be of a critical nature and 7 which were significant in nature. Of the significant issues identified, these include lack of compliance with the authority's travel and reimbursement policy, claims not being supported by legible receipts, and management checks on submitted claims not being sufficient. The other negative audit opinion was for employee general expenses, and it was very similar issues to those I've just previously mentioned with employee mileage. So 3 out of those 4 unfavourable opinions were conducted as an unplanned reactive audit review. They were completed following concerns raised by the audit team and through the Financial Management Board of the Council. The completion of any unplanned and reactive audit reviews may affect the overall completion of the audit plan, and this will continue to be monitored by myself. Work has been undertaken during Q3 and Q4 on the progress of implementation of recommendations from previously issued reports, along with the provision of financial advice across the service areas. The outcome of the follow-up work on recommendations will be brought to the committee during our March meeting. During Q3, the internal audit team continued to work with the digital design and innovation team to develop a recommendation tracker application. The completion of this work has been delayed due to priorities within the digital design team and staffing changes. It was planned that user acceptance testing of the system would begin within Q4, with implementation commencing from the new financial year. However, further staffing changes within the digital team has affected this time frame, although I have now been told that the SRS, members of staff within the SRS will be assisting to move this project forward. That was my summary from the report, Chair. Happy to answer any questions.
Thank you. We'll go to Rodri first, please.
Thanks, Chair. Yeah, and obviously you've got a small team, so I was wondering about the impact of the unplanned audit work and how you manage that. And also you've just touched on the tracker as well, and I was just wondering the impact of the delay of that going live, and when could we realistically expect to see it, do you think?
Yeah, thank you, Rodri. So in terms of the effect of the audit plan, we do include at the start of each year an allocation of time for special investigations and any unplanned reactive work. So that will be used for these audit reviews. At the moment, we are still looking like being on target with the current year's plan. So it hasn't overly affected it too much, but obviously we don't know what's around the corner. There could be something coming in today, tomorrow, that might then affect the overall plan because of time's already been used up on other reviews. In terms of the recommendation tracker, I think I've mentioned previously there were some bugs within the system that needs to be ironed out with it. The move to SRS being able to look into this project should actually help iron out those bugs within the system and how the system is configured. So it should actually be a positive move through this delay. In terms of affecting moving forward, it would just mean that we'll have to continue doing our current system probably for audit reports that we've issued this year, and then we'll move over as quickly as we can for future audit reports, probably I'd want to say May, June onwards next year, or next financial year, sorry.
Okay, thank you. A couple of points. Maybe start off by picking up on the point Roger made in respect to the audit plan and performance against that. I'm fairly relaxed in terms of whether you achieve your audit plan or not, because personally, I think the work you're doing in respect of these reactive audits are more valuable, because what I value in an audit team is its levels of agility and being able to respond flexibly to situations as and when they arise. So my personal view, and hopefully a view shared with the remainder of this committee, is don't get too hung up by completing the audit plan. That's not what it's about. What it's about is focusing on and undertaking good quality, relevant audit work, and I think you are. And I would encourage you to continue working with Peter, Deputy Chief Executive, and the Financial Management Board in terms of identifying those hotspots and focusing your audit activity appropriately. On a minor point, can I just pick up some terminology you've used in respect of, let me get this right, I think I'm on Appendix 6, the critical audit finding labelled reference 1.01. But if you've got there, okay, you talk about no second line monitoring. When you use the term second line in that context, what do you actually mean, please?
So second line in that context is based on the Institute of Internal Auditors 3 lines model. So first line of defence is the employees themselves and the employees' management in approving, in these cases, approving their expenses claim. The second line check-in would be a different team then. In this particular case, it would be the payroll team, so who have overall oversight of mileage claims. The third line check would be internal audit. So we come in as the third line. So the second line is the absence of any checks being done over and above management on a regular basis.
Okay, thank you. Understand. And in respect of the audit points you've raised, to what extent are management engaging with points raised and then taking robust action in light of those findings, please?
Yeah, so in terms of these 4 audit reviews, I can confirm that management have been fully engaged within the audit process. All the recommendations that we have issued have all been accepted by management and actions have been put in place as quickly as possible. We're in the process of finalising the last couple of these reports at the moment, following agreement with SLT. And in terms of the employee mileage and the employee general expenses audit, discussions have been held with the Chief Executive, who requested further work to be done in specific areas of these reviews as well. So we fed that back to the Chief Exec.
Okay, all that sounds really positive. You've asked whether we should call officers into this committee to provide an update in terms of progress against these actions. Do you think that's required at this stage, please?
Thank you, Chair. So at this stage, I would not be recommending to call in any senior management to the committee. Obviously, that is up for committee to decide ultimately. It would not be my recommendation. Obviously, if we were in 12 months' time, we'd re-audited these areas and we still found significant concerns and unfavourable opinions, then that recommendation would likely change.
Okay, to me that sounds sensible, so I don't think it's appropriate to call in officers at this point in time. Okay, so we look to conclude this item by saying thank you for an excellent paper. Continue the good work, Jan. I think it's really, really impressive. I think this committee can take note of the audit opinions issued and progress made against the plan as set out, and the apparent good levels of engagement by officers in respect of the issues raised. So thank you once again. If we move on then, please, to item 13. Item 13 is the work programme. This is just for noting. I'm not seeing any questions or comments at this point, so we will just note that. Item 14 are the draft dates for the remainder of this year, subject to full council approval next week. Yet again, I think we can note that. Any clashes or issues with these dates, please advise Wendy outside of this meeting. Oh, beg your pardon, Peter.
Sorry, Chair, wasn't quick enough on the button. So just in terms of the work programme, I think Rachel's now left from Audit Wales Chairs. I think it's just to confirm that I think at the next meeting there are 2 reports marked to come in from Audit Wales. Charlotte from Audit Wales came back into us earlier today to confirm that those are unlikely to make it to the next meeting. So we'll obviously liaise with Charlotte via Richard and Hannah just to schedule those back into the appropriate meeting.
Thank you, Peter. Okay, item 15 is just for us to confirm minutes of previous meeting. Firstly, thank you, Wendy, for minutes. As always, top notch. I'm not going to ask people to propose and second them. I'll take them as read, I'll take them as approved, unless anyone shouts now. Good. Okay, item 16, just a note for date of the next meeting, 14th of March. And then we'll move on to item 17. Item 17 is respect of a decision as to whether we should exclude the press and public from a meeting in respect of the following item. Officers have concluded that we are permitted to exclude press and public, and therefore we will do so, and therefore close the public element of this meeting. Thank you.